Welcome back, folks. We ended out, finish up 119, NASDAQ up 30, S&P's up 13. Now let's go over to our man, Mr. Rob McEwen. Rob, folks, is the CEO of McEwen Mining, trades in New York and as the MUX. Rob, welcome back to TFNN.
Hello, Tom. Thank you very much. Glad to be on.
It's great to have you back. And folks, you know, Rob, of course, has been on before. If you're a new listener, he has a high growth producer, gold producer, that you talk about an ambition. The ambition is to get into the S&P 500 in 2015. Rob, what does it take to get into the S&P 500?
You need a market capitalization in above $5 billion.
Wow.
And you need 4 consecutive quarters of earnings.
Okay. So
it's an ambitious goal.
That's good, though. Hey, listen, there's nothing wrong with that. So tell us how you're going to do it.
Well, first, we have our own organic growth that I heard on while I was waiting your advertisement for McEwen Mining. So that'll take us from 100 to just under 300,000 ounces of gold equivalent, and that's gold and silver.
Yes.
And then we have to look. We hope our exploration will deliver something, but we'll need to do a combination with someone to get up to about 600,000 ounces. And then have, in today's market, you really need a minimum of 600,000 ounces, but probably 750,000 ounces of annual production, with a pipeline getting you closer to 1 million. So it's in this market today, I think some combinations, you could create a company that's possible that could get there. And the only way you can get into the S&P 500, the company has to be an American company.
Okay.
Post 9/11, all of the foreign companies were removed from the S&P 500. Right now, there's only one company, gold company, in the S&P 500, and that is Newmont.
That's amazing.
Unfortunately, most of the mining companies in the world are non-American.
Yes. And
at one point, it was the opposite.
Right.
So there's probably about 5 companies right now that have a shot of getting into the S&P 500, and we'd be one of those 5.
And folks, as we're going through this, if you're watching Tiger TV or if you're in your car, just remember that you can go over to TFNN. You're going to see the McEwen Mining banner, but hit that banner because as we're speaking here, it'll bring you over to the Rob's site, okay? And there's a beautiful presentation that you can hit the company's presentation, so you can actually go through all these numbers with some great charts. Let's talk about CEO ownership in companies in general, Rob. And in particular, let's talk about, the gold mining business. Now, you have 25% of McEwen Mining.
Yes, my cost base is $125 million. And I don't take a salary, so the way I look at the world is the same way my shareholders look at the world. We're going to make money through a higher share price together.
Yes. And, as I was going through the presentation, can you explain to us, okay, inside the presentation you have McEwen Mining versus a market compatible. And there was a 90% difference there. What exactly does that slide mean, though? What I'm looking at, folks, one slide says $1.7 billion, for a couple different companies, and the other one says $880 million. What does that slide mean?
All right. Well, in McEwen Mining, we have the growth that you just talked about, going from 100,000 to 290,000 of gold equivalent ounces. And then we have a very large world-class copper deposit.
Yeah, that's huge. So I saw that, right.
It's 18.5 trillion, or billion, sorry, not trillion, pounds of copper. So there's a company out there called Lumina Copper that has a market capitalization of around $400 million.
Okay.
So we've used that as a proxy and said, well, we're about 2/3 that size, so if you put that up there, plus a gold company that's producing, has the same sort of growth curve as we do, that adding Lumina plus the other value compared to ours, there's quite a difference. That's that 90%.
That's
difference.
Cool. No, I got it. I have it now. Okay. And
so it's really, if you put the pieces together, you've got something you can buy a lot cheaper than if you bought those other 2 companies together.
And what you also have is that you have your money behind the company and you've done it before, right?
Right.
Which is, if you don't know that, folks, okay, bottom line, Rob started Gold Corp, and as they say, the rest is history. Hey, you know, I don't mean to back up for a second, but I can tell you, it's so insane. There are still some listeners actually that own Gold Corp, and we're talking about $4 or $5. It goes back so far, and sometimes I get emails. I say to myself, "This is amazing." It really is. You know what I mean? It really. Well, we know how it goes, right?
It's been a great run.
It absolutely has. I'm looking at your production, the production growth. So between now, I mean, you're looking at a 300% production growth by 2015, right?
Yes.
Amazing. So what are the challenges right now that you have in your business?
Well, some of our assets are in Argentina.
Okay.
And so Argentina has been playing around with export or taxes on exporting capital, on exporting profits. So
okay.
Any company that has assets in Argentina has been heavily penalized in the market because of all the uncertainty down there. We're taking the cash flow from our gold and silver mine there and putting it into exploring our copper project down there.
Okay.
And we have engaged an investment banker, and they're out marketing our copper project to see if we can joint venture it or sell it. It's a large project, but it could be a source of financing to fund our future growth.
And so in Argentina, the method to the madness, it seems that at some point, wouldn't they want to actually get paid for what's in there? I mean, cash flow-wise, right?
Yes, but at the moment it's a negative incentive right now because there are a number of companies there that would like to build their assets, but with the uncertainty, they're deferring any of those decisions.
Now, let's talk about Mexico. What do we have happening in Mexico?
We just opened our first mine there called El Gallo 1. Okay. It officially it reached commercial production the beginning of this year. It'll do about 30,000 ounces of gold, so a small mine for about 8 years. And we're permitting our phase 2, and we hope to start construction in the third quarter of this year and be producing in the second half of next year. And that will produce 5 million ounces of gold a year, or silver a year, which is equivalent to about 100,000 ounces of gold a year.
Right.
And then we're also permitting in Nevada our gold bar properties. So between these three, on top of San Jose, that gets us to the 290.
And folks, as you're going through this presentation, you're going to be able to see. So El Gallo 2, it looks like El Gallo 2, your total cash all-in cost is pretty inexpensive compared to what it costs to get gold out of the ground these days. Well, all-in cash, right? Meaning.
Yes, it is. It's an open pit mine with a milling operation, and the costs are average to slightly below average.
Amazing. Listen, Rob, thank you so much. We really appreciate it. Folks, come over to our website at TFNN. You can hit that McEwen Mining. Rob, we look forward to having you back.
Thank you, Tom.
Have a great one. Have a safe one.